I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, nervous times in Ontario. A listener from Ontario is wondering if they should believe what they're reading, that the Ontario housing market is rebounding, or is something else happening? I also noticed on Friday they said that home prices across the country had gone up over 1% year to year. Is that happening?
Oh, it's hilarious, isn't it, Jim? It's just what we've been saying now for a couple of years. You know, when it comes to the end this time around, everybody forgets that Google is around this time. Google has recorded every single comment made about the housing market for the last 10 years. And unlike the last great housing correction of the 1990s, there'll be no escaping your comment. You are going to be held responsible for those comments. Like the real estate board, the British Columbia Real Estate Association is going to be held comment for that fallacious report that they issued today for your province. Anyways, in terms of Ontario, Jim, the Ontario market had a minor rebound. But that was not really a rebound. What they're recording is they're recording the same bump that you folks had in British Columbia last year. So when a housing market slows down, there is a pent-up demand that still needs to be put through the system. It's sort of like when you get a backup in your septic system. You keep working the plunger till all of a sudden that you get it clear and the whole thing clears out. And that's what happens with a housing market. Initially, the market slows down and corrects, but there are still people in the queue, people who have made decisions in months past or years past even that have to be worked out. And that's that's what was happening in Ontario for the months of June, July, and will probably happen here in August again. It is such a minor amount, though, Jim. Like, it's such a minor change. They're searching for the needle in the haystack, organized real estate, the real estate brokerage industry. They're just looking for that cure that their commissions will return, that the market will change the path that it's on. And that's not going to happen, Jim. It is not going to happen. This market has liquidated enough equity now in Ontario that it's not going to happen. Now, the province of Ontario, unless the new Ford government listens to Tim Hudak from the Ontario Real Estate Association, and in turn puts in, I don't know, something like a $37,000 first-time buyer interest-free loan credit, like happened out in British Columbia, there'll be no boost in the condo prices as the single detached market is falling, like you had in Vancouver. That is not going to happen here. The markets in Ontario and British Columbia are structured totally different. Even though the railroad track that the markets are on are identical, the composition, how the housing stock is been built over the last 40 years, and how it's owned as of today, is totally different in Ontario than it is in British Columbia. I mean, your condominium to single detached ratio in Vancouver is probably almost more than double what it is here in Toronto. So you've got two totally different markets in terms of the pressures that are coming to bear in the marketplace. The Ontario, what that means is the Ontario home buyer is not going to turn to condos as readily as they were forced to turn to them in Vancouver with that $37,000 boost. And again, the $37,000 boost isn't happening in Ontario. So this listener, they heard organized real estate, they heard the banks, they heard the bank economists, they heard the builders. Everybody who has skin in the game that needs the housing market to get busier, they believe they need it to get busier because it makes it an easier dollar for them to earn, is out there saying the housing market has turned and it's going to return to the path that it was on a year ago. Okay, well, that is not going to happen, folks. It is impossible. The builders don't realize that it's really to the builders' advantage about a year and a half into a housing correction because Canadian home buyers prefer to buy new homes. So the builders would have some kind of short-term pain here over about a year, and then they capitalize on that for another decade. They come out way ahead. They just don't understand how the housing market works either, and they don't understand what the preference of the home buyer is. We study home buyers, so we know what their preference is. We know that in Ontario, not only are people paying less money on average, the amount of house that they are buying is vastly superior this year over last year. It's why the exact same identical house could have lost as much as 30% in value or more in Ontario, the greater Toronto area, yet the home buyers are still spending the same amount of money. Every house price metric out there, as we've said on the show over and over again, Jim, is based on buyers. It is not based on houses. When you are getting a whole bunch more house for the exact same amount of money, the average selling price stays the same. The price of the houses that you're buying have dropped massively. There is no way, Jim, in Ontario, that the city of Vaughan, north of Toronto, which would be like Abbotsford in British Columbia, to Vancouver, has had the single detached homes drop in some places 40% already, and housing prices have gone up. It just doesn't make any logical sense. The condominiums that were being sold, they're not even the same condominiums. What I mean is a higher quality of condominium has been selling, meaning more expensive than the lower price condominium. So all of that house price gain is illusion. Like I said at the start of this answer, Jim, Google records all this. Google, years from now, people are going to be able to go back and double check all of the myths and falsehoods that they were told about the housing market. The exact same, if you had access to 1988, 1989, 1990, 91 information from the newspapers, you would have read the exact same thing. The only problem is you can't go back and search. It's very problematic to search in newspaper archives to find those specific news reports. This time, you're going to type a couple things in your keyboard, and they all show up. So the Ontario housing market, it is not rebounding. The Ontario housing market is continuing on the path it was on. Ontario home buyers today are often getting over 30% more home for their home buying dollar in a short 12-month period. Just 12 months, Jim.
Is it true, Ross, Ontario homeowners have lost over $200 billion in net wealth in the last 8 months?
Yes, it is true. So this goes back to this question. This is probably really where, when we're explaining things to people, because this is the business that we're in. Homeownership wealth is the business that we're in. Homeownership wealth is over a $5 trillion asset class in the nation of Canada at its peak. We were over $5 trillion of net wealth was sitting in Canadians' homes. That is no longer the case. Now, of course, you had to take off the mortgage debt. So I'm just saying when that mortgage debt would have been paid off, that's what the situation was. when we monitor a housing market, the same way that when we were monitoring British Columbia back in 2016, when we came up with the billions of claims then, we are measuring the housing market based on the same quality of house. What that means is that would be the appraised value of the homes. So when your BC assessment came out the next year, it didn't measure off peak. You're going to start getting to see some more readings out in British Columbia as the 2018 assessments roll out. In Ontario, when we're measuring a $200 billion loss in people's net wealth, this is based on what those houses would appraise at. If you owned a house and you went into the bank and you wanted to borrow money against your house, the bank determines how much your house is worth with an appraisal. That is the only thing that determines what your house is worth. Now, you would have to list that house for sale and find a buyer who's willing to pay the appraised value in order to get the cash out. Or you can go to the bank and the bank says, this is the appraised value of the house, we'll lend you the money. If Ontario homeowners en masse went to the banks and asked the banks to get the appraised values on their home as of the end of July 2018 versus the end of July 2017, the banks would be telling them it's $200 billion less. What your listeners can understand, I believe, is the mortgages on those houses hasn't changed. The only thing that's been lost, well, it's changed a little bit, but not enough to enter this discussion. The only thing that's been lost is home equity. And it's been over $200 billion. The reason why an economy changes because of the housing market is based solely on that one reason. When people lose money, whether it's in the stock market, whether it's by falling house prices, or it's because they lose their jobs, the market reacts to that. The economy reacts to that. What I will say is Ontarians have never lost, ever, in their history, $200 billion worth of net wealth from their homes. It has never happened, Jim. This is a record. In August, it's going to get more. Throughout the rest of the year, the loss is going to be even greater because people aren't taking actions to protect that wealth. But that's another story.
We'll have more with Ross Kay right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener from Calgary, heard here on the show that home buyers are getting homes in Calgary for 16% less than they did a year ago, but they're not being reported in the press. Why not? And what is really going on in Cowtown?
Yeah, so in Calgary, what you have is you starting in 2014, that housing market started to contract. And then it's gone through a small correction. Now, a small correction, Jim, in the case of Calgary, that's a totally different thing than Ontario or British Columbia because the house price gains there weren't as high to start out with. So when we're talking about a contraction in a correcting market in Calgary, this is what we're talking about. A home buyer today in July of 2018 can go out and purchase a brand new house in Calgary that would have cost them 16% more in 2014. So you can go out and for the exact same amount, buy the exact same house in July of 2018 that in December of 2014 would have cost you 16% more. Now, not only that, Jim, everybody forgets this little issue, and that's inflation. We've had about just over 6% inflation measured via CPI. Now, when you take another 6%, now you're at a 22% drop. So home buyers in Calgary today purchasing a house in July of 2018 would have had to have spent 22% more to buy the identical home at the end of 2014. That is a monumental, it's staggering, that loss, Jim. But you don't hear that reported in the newspaper. You don't hear the real estate boards talking about it. You don't hear the real estate brokerages talking about it. You don't hear the banks talk about it. And you don't have local economists talking about it. And the question you've got to be asking, your listeners have got to be asking this, why are we not seeing this in the media? Why is this not being reported by the real estate boards? Why is this not being reported by real estate brokers? Well, the reason is because they're looking at the buyers. The average Calgary home buyer is only spending $10,000 less today than they were at the end of 2014. $10,000 less. That's it. Now, the people who are buying houses in Calgary are doing pretty well. They have not had any job loss. They have not had any income decrease. They've actually had an income increase, but I'll just leave that out of the mix for now. They're the people who have such a good job opportunity or a good job situation that the banks will lend them money. Those people are going out and buying houses, and the mix of buyers is only paying 10% less today than they were at the end of 2014. But what they're buying is a whole bunch more house. And this is why the way that the statistics are done, the way that house prices are discussed, every single chart that you find on the internet when you search Canadian home prices over the last 40 years is never, ever talking about houses. All it's doing is talking about the buyers. The Calgary buyer is only spending $10,000 less. But he's buying a house, or she's buying a house, that is 22% more. They're getting a 22% increase in the quality of home that they're buying. Maybe instead of buying a semi, they're now getting a single detached for the exact same amount of money. Maybe instead of buying a house that was 25 years old, they're buying a house that was only 2 years old. A great, big, huge increase in quality of the house. Maybe instead of buying a house that had 8-foot ceilings on the main floor, they're now buying a house that has 9-foot ceilings on the main floor and has hardwood floors instead of carpeting. Brand new hardwood, granite countertops, top-of-the-line bathrooms, updated, state-of-the-art insulation, state-of-the-art central vac system. All of that they're getting for less money than they would have paid for a house without any of those features in 2014. Home buyers need to understand. You need to understand the quality of the home that you're buying any single month that you buy. You need to know whether you're paying more than you should for the house based on the quality that you're getting or less. We often refer to it like in this way, Jim. A person goes into a car lot and there's 3 Toyota Camrys there. One with 50,000, all for the sake of the argument, 2015 model. One's got 50,000 kilometers. One's got 75,000 kilometers. The other one's got 120,000 kilometers. They've all been taken care of identically. Now, the one with 120,000 kilometers, the tires there's only just a minimal amount of tread left to let it pass the safety. The one that is 80,000 kilometers, its oil changes have not been done as regularly, and the interior in the house it's a little bit more ratty. And the one that's at 50,000 kilometers, it's been owned by a little old grandpa down the street who's taking care of this baby. It's just like it's his 1955 hot rod. He just takes care of it with precision. The home buyer, the car buyer walks into the lot, and there's signs in the front of all three of these cars that say they're $9,000 each. Pick which one you want. Well, everybody in their right mind would buy the one that old grandfather owned, because they're getting more car for their money. The second buyer goes in, he buys the second one. He buys the one with 80,000 kilometers. Even though the interior is a little bit worn, maybe a little bit worn out, it's actually a better value. His car appraiser tells him. And the third guy in, he's forced, if he wants to buy a Toyota Camry at this lot, he's got to buy that last one that's there. They all pay $9,000, Jim. The first guy just got a lot more car for his money than the last guy did. Home buyers need to approach home buying from the exact same perspective. You need to understand how much you're actually paying, how much house you're getting for your home buying dollar. This is not something you're going to get from a real estate broker or from anyone else, because they're not qualified to make that determination. They don't even understand what I'm talking about. It's sort of like the Camry. You could bring your grandma along with you, who's maybe never touched a car in her entire life, and ask her which one of those three cars you should buy. She likes the one that's got 150,000 kilometers on it, but she likes it because it's red. The other one's black, and the other two are black and blue. Her favorite color is red. She tells you to buy the red one. That's what happens when you're out searching with houses with a realtor. You're not getting a clear reading in the house, like these people in Calgary. This listener in Calgary is reiterating. How the same identical house of the same quality on the same lot of the same age with the same features would have cost you 22% more in Calgary. But the average selling price has only dropped $10,000. Why? Because nobody measures houses. They're only measuring buyers.
We'll have more with Ross Kay right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener from Vancouver, is asking how local realtors are claiming home prices are up 10% year to year, while at the same time nothing is selling. How can you have higher prices if nothing is selling?
Yeah, this goes back to actually both of the previous questions this week, Jim. We're harping on the same issue over and over again. How can the benchmark price go up 10% when houses are less money? But like, it is really such a bizarre comment for your listeners to have to try to rationalize in their own minds. And because there's so many voices out there that are all saying that the prices are higher, they want to believe them. You know, it makes more logical sense. They're not gonna be wanting to listen to me or sitting on the show and saying, look, these guys don't know what they're talking about. They're not measuring houses; they're measuring buyers. So I'll tell your listeners a couple real easy ways for you to check things out. Go to websites where you see prices reduced. So there are lots of real estate websites out there. I'm not going to recommend one or the other. There's dozens and dozens of them out there. There's nothing special about any of these real estate websites, folks. They simply take the information that comes to Realtor.ca. It gets sent from the Realtor.ca servers out to their local real estate boards in a spreadsheet. That spreadsheet populates thousands and tens of thousands of websites across Ontario. Some of the people have been, some of the agents said, well, I'm going to show price reduction. So find one where it's price reduction and start looking in Vancouver. You're going to see huge price reductions on properties. Huge. Yet you're not going to hear about it from the real estate board. You're not going to hear about it. Your listeners can understand this about the Greater Vancouver area, Jim. In the month of July, just the homes that were listed for sale, so only the homes that were on the market, those homes had their listing prices reduced by over $300 million during the month of July. Now, if housing prices weren't dropping, you wouldn't have had a record month of July for price reduction. You had over $300 million of price reduction in the properties that were just listed for sale in the Greater Vancouver area. August, it's on track to record that amount of declines again. Right now, it's on track to record over $300 million worth of price reductions just on the properties that are listed for sale. Just on those properties. Not all the houses, the ones that are actually advertised in Realtor.ca. Another $300 million with reductions, which when the end of the month comes, that will be a record for Greater Vancouver. What the problem with what I'm telling you is, Jim, is that no one has ever in the history of organized real estate collected that information. There is no historical perspective available anywhere else other than my firm, because that information has never, ever been collected. And you can't go back now and try to collect it using old information, because a lot of the information has been purged. The way that the information is collected by the real estate boards, it means that when the end of the month comes, there's a massive amount of information that is purged. You had to have been recording that for a live as it was ongoing. Because we're looking at housing markets and we're trying to time the market, we're trying to figure out whether or not we can give you advice to buy or sell a home. We're trying to give you advice whether or not your existing home is going to go up in value or not. What type of a mortgage should you be taking on it? How long of a mortgage term should you be taking? Because the market dictates the answers to those questions in many circumstances. We have had to collect that information for a very long period of time. Now, I don't have that information going back 40 years, so I'm not going to pretend that I do. I've got it going back far enough that I know how the market's reacting and what those price reductions mean. So when your listeners are hearing people say that average selling prices are up 10%, no, but they're not. Here's how your listeners can look at this answer. You've got 10 buyers lined up, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. They're all going to spend $10,000 more. So the first guy will spend 100, second guy will spend 110, next guy spends 120, right on through up to the last woman there, and she's going to be $200 200%. She's going to pay double. Those same group of buyers go out this year and buy a house. Next year they go out, but the first buyer, the buyer that was buying the $100,000 house, he doesn't buy. There's only 9 that buy. That skews your average selling price upwards. If that mix of buyers took away 10% of the volume, well, 12% of the volume, then the average selling price would go up because that one buyer dropped out of the mix. That's why your average selling price, the benchmark price, can go up. Now, oh, Ross, but if the benchmark price is different, they have this fancy methodology. No. When you chart the benchmark price from the date that it was created with a lag, well, actually, you don't have to start the lag at the start because the Canadian Real Estate Association, when they created the index, and British Columbia Real Estate Association, they went back and backdated the data so that the historical reporting lag doesn't apply. It's only after the index was actually launched where the lag started to appear. But when you adjust for that, it records the average selling price 100%. It is no different. So they can claim all they want. When you sit down with a calculator and you type the numbers in, the average selling price in the Greater Vancouver Board has increased exactly the same as the benchmark price is, identical. So that we know that when the prices go up, it's got nothing to do with the houses again. You simply have dropped off one of the buyers, the buyer who was buying the cheapest home. That skews your average upwards. So when your listeners are hearing in the news that Vancouver, the realtors are claiming a 10% year-over-year increase in the benchmark, but you're looking at $300 million worth of reductions in July, $300 million worth of reductions in August, it doesn't make sense. Well, it doesn't make sense unless you understand the real estate boards, MLS HPIs, benchmarks, average selling price, Paranet National Bank House Price Index does not measure homes, no matter what they tell you. They are measuring what homes a specific group of buyers is buying in a given month. It has nothing to do with measuring the identical home year over year, no matter what they tell you. If your listeners are looking for confirmation with this, here's the easiest way to describe it. How many houses do you know in the entire time you've lived in the neighborhood that you've lived in where that identical home sold twice within a year? I know that the answer right now in everybody's mind is, I can't think of one. That's because none exist. There might be the odd outlier where a divorce situation happened or someone was flipping a property and trying to make a gain on it that way. But those are extreme outliers, like 0.001% of the housing stock. It doesn't happen. So if it doesn't happen, then how can all of these people claim they're measuring the same quality of home? Go ahead and try to find the same house that sold twice in 5 years. It's a really, really big challenge to find even the same house that sold twice in 5 years. It's not until you get to 10 and 12 years out where you see the same houses that have sold twice. So why are all of these price metrics claiming that that's what they're doing? They're not. They're measuring buyers. The average buyer in Vancouver is paying 10% more because one of the first-time buyer didn't buy this month. That's all that's happened. The houses that they're buying have all been reduced by $300 million in July, another $300 million in August. If prices were increasing, those reductions would not happen. Because I'll tell your listeners, Jim, in 2016, before the market rolled over, in March, April, and May of 2016, there was virtually no reduction in listing prices during that period of time.
Ross, thank you so much for chatting with us.
Hey, thanks for having me back, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HouseStreet.com radio. Find us on Twitter at HouseStreet. Our YouTube channel is Talk Digital Network. If you have any questions for Ross or anybody else on the show or for the show, you can send them to info@HouseStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.